Good morning, it's Richard Pears from FinextraTV, and today I'm joined by Philippe Zaouati. I'm his CEO of Mirova Asset Management, and I'm really excited to talk to you today, Philippe, because hearing you speak and the announcements from the One Planet initiative, reading a bit about you and what your firm has been doing for the last 10 years or so around sustainability, the work that you're doing with Prince Charles on the Terra initiative is really what we want to get into today. So tell us a little bit about yourself and how did this passion that you're living every day come to be, and what are you doing at Mirova?
Good morning, thanks. Mirova is an asset management company fully dedicated to responsible investments since the beginning. I mean, we created it 7 years ago, so it was in 2014. I joined Natixis Group a couple of years before this. I mean, it was in 2007, in the middle of the financial crisis. I was the deputy CEO of Natixis Asset Management. And then we started to integrate and to look at the climate impact and the way we could invest in climate-friendly companies and in solutions for sustainable development. And I mean, from time to time, we launched a couple of new products, and it led to the creation of a fully dedicated company for sustainable development in 2014. So today we manage about 20 billion euros in different asset classes, in listed equities, in bonds, green and social bonds mainly, and also in real assets, in direct investments in infrastructure, in renewable energy, clean mobility, and also natural capital.
And so, you're 7 years into this. For a lot of people, it's quite new, and so there's still a lot of discussion about, is this just a corporate social responsibility play? It's values, but there's no value to be derived. Tell us about your experience of the actual the growth, the value you've derived for your clients, if you will, and what market issues and opportunities you think you're solving for.
From the beginning, we have started to combine, financial performance on one hand and social and environmental impact on the other hand, with the conviction that it was really possible to do both at the same time, because the economy has to transition, and because there are a lot of new opportunities, risks on one hand, but also opportunities on the other hand. So we could use ESG data and also impact assessment, not only to reduce risk and to avoid some bad situation, but also to select new companies which are really involved in building solutions for sustainable development in a lot of different areas. And that was, I think, something very important to understand. It was not only renewable energy or niche solutions or expertise, but very broad. I mean, you can find it of course, in buildings, in energy, in consumption, in mobility, and so we discovered, very rapidly, that it was possible to build a very diversified portfolio with a strong conviction, and with using our expertise in that field to as a grid to understand the evolution of the economy.
And we're seeing huge amounts of money, obviously, going into sustainable funds at the minute. It's just off the charts, and the debate seems to have gone away that you can't get good returns from investing in conviction-based policy initiatives. Is the performance of your organisation showing that there is great value to be derived?
There is great value. Of course, it's easy to say it now because the last 2 years were absolutely incredible about this, because I think the market has clearly now understood that the shift is now, and of course the pandemic situation has been a catalyst of this, and most of not only the pandemic, but the response to the pandemic from the governments, and the fact that most of the recovery packages are targeted into this new economy, and so that brings a lot of money in the space. And of course, we have seen all the environmental friendly companies grow a lot this last year and 2 years, and so we clearly the ESG funds have outperformed a lot the markets of these last 2 years. But if we look at our performance the last 7 years, and not only the last 2 years, it's something that we can show as well. I mean, the performance on the 7 years is very good, and we have started to overperform before this pandemic. So I think there is a lot of value. And what something I would say funny is that during a lot of years, the questions that I had to answer to were this one. I mean, do you think you can add value? And the last 12 months, it was exactly the opposite. Can you explain why you have outperformed?
Yeah, fantastic.
And basically, this is the same question, which is making a relationship, I mean, strong relation between financial performance on one hand and sustainability on the other hand. But what I have to say is that what makes our position strong, I think, is that of course we want to bring a good performance to our clients, but we also want to have an impact, and a sustainable impact, social and environmental impact, and that's key. It's not only about financial materiality; it's clearly double materiality, and I think that allow us clearly to build this expertise, because we have extended teams working only on measuring sustainable social and environmental impacts from companies, on projects, and so on.
So a lot of people say, there's not many bankable projects out there. It's just a small market. I mean, you've already implied that, actually there's a lot of opportunity out there. But give us an example, if you can, of, I read on your case studies a few examples around hydro and, hydrogen taxis, etc. But any examples you can give of this all coming to life?
It's a question of the dynamic of the market. Of course, if you take a photography at one period of time, you can say there is not enough project and so on. But if you look at the evolution of all these markets the last 20 years, you can see there are some dynamics, some waves. I mean, we started to invest in renewable energy 17 years ago.
Oh, wow.
At that time, we launched the first public-private partnership in France to invest in wind energy in France. It was the very beginning. I mean, at that time, if you have taken the photography of the market, you could have said, I mean, the market is not very, it's very small, it's niche. What are you going to make out of this? And then we were one of the engine, I mean, to create this market, because we need also financial players to be involved in it. Our conviction is that finance is not neutral. And that what we do in finance can have an impact on the development of the market. So it was clearly the case in renewable energy. Today is clearly the case on hydrogen, for example. We have started to look at the clean mobility market 3 years ago, and we have made our first investments only these last months, because it takes time to understand the market, to understand the dynamics, and so on. So we have invested, for example, one of the two last investments are Drive Eco, which is a small French firm providing a battery solution from solar energy. And another one is Hype. Hype is a taxi fleet in Paris, which will use only hydrogen as an energy. And so these are great stories at the very beginning, but we think this market will grow as big as the renewable energy has grown the last 15 years. And that's the same for natural capital, agroecology, and because in these spaces you have a combination of the need for the carbon neutral solutions and decrease of the carbon footprint, and also a lot of technology, a lot of innovation, a lot of new entrepreneurs coming into this space. And so that the combination of these two, the need on one hand and a lot of dynamic on the other hand, create a lot of opportunities.
So tell us a bit about, with President Macron at the One Planet Summit, and you were part of the announcement with the Prince Charles's Sustainable Markets Initiative and Terra Carta. Tell us what that is all about, and then maybe come back to natural capital for us.
So the financial markets are now has, I think, a good vision about the carbon impact and the climate impact. I mean, since the Marc Carnet speeches, and since, because we now understand the risks and the opportunities, and so it's in the market. Okay, this is clearly not the case yet for nature and biodiversity. And for many reasons, because on the political side, it's not yet as well. There is no, a global objective, and we are looking forward for the COP, the biodiversity COP this year to put some objectives as the Paris Agreement did for climate. But on the other hand, the other issue is that we do not have a lot of data about this. It's very difficult to understand the impact of companies on nature and on biodiversity. Impact and also dependency of the business on nature and biodiversity. Of course, the pandemic has shown clearly that all the businesses were dependent on nature, and that's obvious today. But how do you measure it? What is for a given company the level of dependency and the kind of impact it has? So today we start to have a couple of very interesting research about this, and so this was the reason. Last year, we have created a consortium with BNP, AXA, and Sycomore, and we wanted to give a mandate to a data provider to build a database with these with new methodologies measuring the impact of companies on biodiversity, and it's ongoing. And we hopefully we will have some first results at the end of this year. So that's for the measurement, but we also can start to invest directly into projects, and this is something we have started to do 5 years ago. We have a partnership with the UN, with the more especially with the UN Convention to combat desertification, and the UNCCD wanted to create an investment fund dedicated to restoration of land in emerging countries. And so this is something we have done. So this is called the Land Degradation Neutrality Fund. Because, one of the Sustainable Development Goals is to reach this neutrality in terms of land degradation by 2030. And so we launched this fund. Today is 150 million euros invested in it. And the Canadian government just announced during the One Planet Summit, Justin Trudeau announced that Canada is going to put $55 million in this fund. And the objective is to invest in new businesses, economically viable, but sustainable in terms of nature and biodiversity. And so it could be reforestation, it could be agroecology, or sustainable agriculture. And so we have made a couple of investments in Latin America, in Africa, in Asia as well. It could be coffee plantation or reforestation in Nicaragua or in Ghana, or nuts plantation in Bhutan, or these kind of things. And these businesses need long-term financing, which they don't find in the traditional banking sector. And so this is something that we can bring.
I think that's so exciting to hear about, and so many questions. But one of them that you touched on at the end there, which is the long-term patient capital. We're absolutely crucial if you're building nature-based solutions. What do you think that you're doing, and what can others do to take that point of view? Is it a question of going to the big asset owners, the pension funds and the insurers and getting a mandate from them as opposed to other parts of the market? And what's your feeling about how we can drive more of that?
Sure. Of course, big institutional investors are key, and they are starting to dedicate small buckets of impact investment within their assets. So it's starting, and I mean, basically at the beginning we don't need a lot. I mean, we don't need billions, but we have to start and to build some track records. And so we have been partnering with a lot of them, insurance companies like AXA, Allianz, BNP, and others, and also foundations and big pension funds are coming into the space. But this is a space where we also need a public-private partnership. We need the public investors and donors and multilateral development banks to be involved as well, because of course this is not the kind of investment that is market practice. It's clearly riskier than traditional investment, and we do not have a lot of track record. We think that we can provide reasonable risk return profiles, but we have to prove it, and we'll need probably a couple of years in order to prove it. And so at the beginning, we need that the public investors help us in de-risking, for example, assets, and that's very difficult to build. It's not easy because the public investors they have their own decision-making process, I would say, and it's not always easy to bring, I mean, at the same time and together a lot of different public and private investors, and so that's also the one of the reasons of the alliance that we have launched under the roof of the Prince Charles initiative, and this alliance for natural capital investment. We start with 3 players which are very much involved in this: HSBC, Lombard Odier, and us. But with the idea also to bring a lot of newcomers in the platform as well, because we also need to convince other investors, other banks to create teams, to create expertise. But at the end of the day, that's what we need. It's financial expertise in order to understand the business models and to be able to invest in this new economy.
So with the initiative that you've touched on there, is it fundamentally, you know, the Terra Carta piece is if you like, the overall charter for what is intended and guidelines, and then you bring together players such as yourself, Lombard Odier, and HSBC, but many others on a platform. What is the actual practical execution of it?
Yeah, I mean, Terra Carta is a big chart, and of course we are a signatory of this. And the idea is really to have an overall guidelines of what should be the behavior of the economic players today in order to accelerate the transition. So that's clearly the broad view. Then there is the initiative that the French launched in Davos last year, which is a Sustainable Markets initiative, which is basically how can we build an economy which is sustainable, and so sector by sector, what should we do in the energy sector, in the mobility sector, in the agriculture, and so on, in order to build this sustainable market initiative. And within these, there is something to do more specifically in the financial sector. And this is the objective of this alliance with Lombard Odier and HSBC. The objective is to put some clear words on natural capital investment. What does it mean? What is it about? How can we put some criteria in order to explain what it means to invest in natural-based solution? And the idea is to create. We don't like the word asset class. It's not a new asset class because it's across asset classes. I would say there are some equities, bonds, and you can invest in different asset classes and help natural capital be better. But it's an investment theme, and we want to explain to the market that this investment theme is interesting for investors, and that the big investors should allocate a part of their assets into this investment theme. So this is the objective of the alliance.
And then if somebody wants to actually make that investment, they've got the choice of working with, a range of players at the minute, the ones that you've listed, but, then there's actual execution vehicles in place, right?
And we all have vehicles in place. So, basically we need to multiply the numbers of this. So, for example, as far as we are concerned, we have today about half a billion euro invested in natural capital. So I mentioned the Land Degradation Neutrality Fund.
Yeah.
We also have a fund which is dedicated to ocean conservation and development, which is called the Sustainable Ocean Fund, where we invest in sustainable fisheries, in the question of the plastic pollution, in order to avoid plastic pollution, and so on and so forth. And we also have dedicated funds with big investors, and especially corporate. And that's very interesting also. Big corporates are entering into this space as well. So we have been awarded a 50 million fund by L'Oréal. So L'Oréal decided to put 50 million on the table to invest in forest and ocean conservation, and we have started to invest to invest it.
Fantastic.
So good news, because it's beyond only zero carbon objectives. So
absolutely, yeah.
Not only to compensate their emission, but also to invest directly into natural-based solutions.
Yeah, and you spoke about data, being a challenge in this context, and we've been highlighting firms like Ocean Mind. I don't know if you know them, but they use satellites and spatial data to analyze fisheries from space, and then use machine learning and artificial intelligence to target fishery protection, and that helps people get a sustainable fishery tag on their product and supply chain. What do you think are the sort of developments in technology here? Is it these sort of things I've listed, or other areas that you find give promise to execute on the data challenge?
Yeah, not only on data, but also on operations. Technology is absolutely key. I mean, of course, to get some new accurate data, but also to help entrepreneurs to build new models. For example, in agriculture, all the mobile tech, for example, is very useful to in Africa or in Bhutan. We have invested in new companies which basically provide services to a lot of farmers, thousands of farmers, and that get back data from them through mobile technology, and then are able to monitor all the development of the crops and the harvesting as well. So it's very interesting, and of course there are a lot of new technologies in this space. In fisheries, we have invested in a small company in the Sustainable Ocean Fund, which provides services to the fishermen in order to only kept the right fish and to avoid the side fishing, and so there is a lot to do in this space.
Fantastic. Well, it's really exciting. I mean, I could talk all day to you on this subject, but give us a last sort of sense of that. You've listed so much to come, but this is such a seminal year with COP26 in Glasgow, and the Biden, etc., coming into the US. You feel like there's real momentum. What do you expect for this year, and what are you looking forward to in 2021?
Sure. I mean, 2020 was supposed to be the year of nature. It has been the year of nature, but in different different angle. So yes, we are clearly looking forward to all these events. Of course, the Marseille events and the Congress of Nature, and the two COPs, or the three COPs. I think basically this year there will be also the desertification COP as well. So we have this year, and it's new, all the three COPs at the same time. And it's also a way to show that all these issues are completely interdependent, and that we have to deal with with biodiversity, nature, desertification, land restoration, and climate at the same time. And so we have a lot of expectation this year. One of these will be to build some new. On one hand, we need some objectives from the countries, from the states, in terms of avoiding the collapse of biodiversity. And so we know that the objectives which have been set 10 years ago are clearly have not been reached, not at all. So we need new objectives to be put. But we also need to create some new standards, and this is one of the objectives of the project, which is the TNFD, Task Force on Natural Financial Disclosure, which will be the equivalent of what was the TCFD for climate, with the objective of defining a reporting standard for companies regarding their impact on biodiversity and nature. So the working group is ongoing, and hopefully we could have a launch of this TNFD this year. Basically in China or in Glasgow at a COP26.
Superb. Well, Philippe, thank you for sharing, your experience and thoughts, and I'm sure people will be, looking up your website to find out more about you. And I hope you'll come back and keep us updated on your initiatives. But for now, Philippe, thank you so much for your time.
Thank you very much.